Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. I must be off. I don't know. I was like, it's whoa. Oh, here's my picture. What am I supposed to do? Oh, that's right. I'm streaming now. Hey, listen, let's go to the charts. We kind of got a weird day today. Well, not a weird day, but like another change. Like the market just keeps shifting back and forth here. So if we look at the treasuries here, we've had another plunge in treasury prices, yields rising here again in the UK, and it looks like that people in the UK are really concerned about some sort of a housing crisis. So we're getting a big move over there this morning. S&P 500 had a really big update yesterday. I don't know, that was kind of like that big jump there after the news is kind of was that after the news? Yeah, I think it was. I wouldn't be surprised to see some of that retraced, but and then oil, we got OPEC today. Okay, so oil has been rising and they're even talking about maybe a $2 billion barrel cut. So that might move here during our session. We got gold and silver. Gold and silver coming back as the yields come back. Silver so volatile. Kappa kind of coming back here. And that means also Bitcoin coming down a little bit. Still hanging at around 2,000. That means you're going to see what? Dollar strength. Yep. So we're kind of back into that strong dollar movement, but that could all shift very quickly today. So we do have some news. Nothing serious at the bottom of the hour. Let's see here. U.S. international trade came in at 67.4 versus an expected 67.7. We are going to have Fed's Kashkari speaking in about 45 minutes. But the one that I think is going to be a big deal today is U.S. ISM Services PMI at 10 o'clock. So remember that the manufacturing PMIs yesterday really moved the markets. So it would not surprise me. I think that it's likely we'll see a really big change after the PMIs are released today. Okay, so what's going on here? Is something wrong with Jigsaw here? Why am I only getting a few levels on my level 2? Okay, it's not that. You know, it took a really long time for Rhythmic to start up today. I wonder if it has anything to do with that. Okay, there we go. Now it's all loading. I was like, So I had some problems this morning. Just the Rhythmic Trader Pro just took longer to connect than usual. And so, like, I didn't start my platform. You know, it takes a little bit of time for the platforms to, like, load all of the data and get going in the morning. And so that was a little delayed. I think that's what was going on there. Okay, so we can see this. I'm expecting that the market may be a little bit testy until that PMI news later today. So I think that I'm probably going to relax, keep the keep things on sim and try to relax. Because I'm everything that we keep seeing in the UK, I'm having a really hard time like keeping up or seeing it. Like it's often it's not reported, and when it is, it's late. And so I'm like, I don't know what's going on, and I can't see the European data. So when it's the UK moving the markets, I think that I just want to be like not involved, right? White House panics as gasoline prices rebound. Moles export ban blasts OPEC plus hostile acts. And the most recent ADP reports better than expected jump in jobs in September. Wage growth accelerates. Really? Okay, so yeah, that's an important one. U.S. ADP employment change was 208K versus 200K, so it wasn't like a huge surprise or anything. There was actually a rise in the treasuries when that news hit. One big piece of important piece of news there that I missed when I was going through everything. Let's come back over here to Twitter. Not a whole lot of activity from Twitter overnight, man. Oh yeah, somebody messaged me. Somebody was messaging me about somebody to help you program. They must not be in the US or something because it took a while to send that message. Hmm. Oh, how come backend doesn't have regular permissions? Or somebody asking for asking for some advice, and he was all talking about technical indicators and stuff. I'm like, humbug. Oh boy. All right. So, I think I got that all out of the way. I have to say, when I came in here, I was like, well, I don't think that I'm going to take too many, or well, any live trades before the news. I still kind of thought that this market might move away from me and do something, but look, it's still kind of chilling there for the last 15 minutes. So that's not great for overall trade, right? Like, yeah, I think that really suggests that even for a sim trade, I don't know if I really have a good opportunity here. This is just very, very constrained here early on. How did your video on price action turn out? I think it's going okay so far. You know, when I first posted it, and I got like 4 comments right away, I think it was, and that got me a little excited. I was like, oh, this could be the video that really breaks out and gets big, you know. But so far, it's mostly performed in line with what other videos do at this time. Maybe a little bit more. Here, I'll show you. Well, I have it up here right now. See, it's like it's the higher end of the range. Now maybe it's actually starting to go through more. But the thing is when I look at audience, it looks to me the vast majority of people that are clicking are subscribers. So it hasn't really been sent out to a larger audience yet, which concerns me a little bit. When I look at the reach here, you know, like nobody's seeing it in search. So that kind of concerns me. It's not picking up on the keyword price action yet. So we got to see I guess we just got to give it more time. But the click-through rate is really good. Click-through rate is really, really good. So this could be one of our better performing videos, although I don't know. I don't think that it's probably not going to go viral. So it's cool. Actually, somebody just commented on that video. I was about to... So what do you use to make money in markets? Well, what video should we send them to? I'm going to say, watch my video on the inelastic markets hypothesis. That should give you, that's the best one. Really, we need to make that PDF. You guys want to make the PDF? Or we could work on the PDF here. Because that's really what, I think that's the thing that really should fill the hole on, like, okay, so what do you do? How do you trade? Well, kind of been a little bit, I don't really say a whole lot about it. I like to make trades and not like tell you guys what I'm doing, right? You notice I don't say, okay, I'm about to take a trade, guys. I'm going to put it here and this, you know, like I'm hoping you're all listening there. You're not paying attention. I'm going to click. And then 5 minutes later you go, oh, so that's been in a position this whole time. Yes. Yep. That's how I like to do it, because I don't want to give anybody a chance to like trade against me. I'm super paranoid like that, right? And it's sometimes it's a little bit of a conundrum, because I want to take a trade in a situation where like you would really want to be stupid to try and trade against me, right? Like I really need to have an advantage. And but it's better to kind of to get a fill when the market is a little quieter, you know? So that can be difficult to sort out sometimes. But Scott says let's do the PDF. Yeah, let's pull it up. Books.google.com. So I already started it here. Block sell. Whoa, 4,800 at 26. Okay, so that makes me think that there's some more selling coming. So my issue here again is that like I don't know what's driving the flow, how much of the flow is coming through. I suspect that it's from the UK, but 48.56 is a lot. 48.56 is a lot, and it might be volatile too. And then we have news too. So like, I don't know if it makes sense for me to try and trade it, but well, maybe on Sim. I would rather write the PDF though. I would love to talk to someone who works in the brokerage who has access to everyone's account. Would love to hear their views. It's interesting to hear the Tasty trade guys' views on it. Well, we could try and get something with Matt, or from Matt Z from Optimus, or from the Edge Clear guys. I'll tell you, when I've never like dove super deep into that question with these guys, but generally speaking, they'll say that, oh, you got these guys that are kind of, it's usually swing traders basically. They usually say like they're better traders or swing traders is the gist of it. But I'm sure, you know, I've also heard that it can be a little depressing sometimes, because there really is like a lot of people lose money, and especially when it gets volatile like this. It's like I was saying in Discord here, like this market, it is really volatile, especially for the treasury market. The more volatility, the more short-term liquidity demands start to dominate the markets. Is a really big thing you got to keep in mind. So especially last week, a lot of that movement that we were seeing had more to do with, pension funds were getting margin called and all of that sort of thing, rather than any kind of change in the markets based on the fundamentals. And so that can make it really hard to kind of sort out where you are sometimes, right? Okay, so first thing is I need to order this little list we've got here and change the language of it to make more sense to a regular average person, perhaps. And we're going to make it into a bulleted list. Oh, very good. It all changed pretty easily. Well, they traded the big order, but now they're like kind of, I don't know, the 5-year is kind of flashing back and forth there, but not a whole lot has happened since that. It was kind of odd. Changes. Just leave it like that. Okay. I wonder if I should really go into platform in this. I think no. I think we can have a big section about platform and stuff in the book, but I think that this is going to be more about strategy. And I don't know. I could write the introduction here, but you guys probably already know that introduction bit, right? See, I feel like I don't feel inspired now. What do you want? So what do we got here in our strategy PDF? Okay, what do you need to trade? You need to have predictors of order flow, which includes breaking news. Okay, you need to watch correlated assets and have a macro view of where the money is going from and going to. You need to be able to read the liquidity in order to verify that your hypotheses are correct and to sort out an optimal entry place. Okay, so volatility here, where we're going to say for the optimal entry place. So this is confirmation. Optimal entry location, optimal entry time. Okay. Oh, no, not volatility. This is reading order flow. Okay. For volatility, we can talk about a couple of measures of volatility. Risk management. Fat tails. We gotta talk about fat tails under risk management. I think when you're trading, like one of the things is you might not notice you're consciously doing it, but sometimes you are searching. It's like you're getting the dopamine, you're browsing through TikTok or whatever, and you keep going. Why do you keep going? Because you think that you're going to see some TikTok that gives you a piece of information that's like going to change your life. Because it's happened before, right? And you're searching for it. And day traders do that, right? So we come in and we're like, there's something I'm going to search, and I'm going to find that one thing that like changes everything, right? Well, I think that the stylized behavior of markets and the inelastic theory of markets are two things that could be that big revelation that like changes everything for you, right? Really shifts your view of the market and takes you from a place where you are frustrated to a place where at least you understand what's going on and what you need to do, right? But beyond that, once you understand the true nature of markets, it's really just comes down to being as informed as possible in the market and making the right decisions. After you understand those things, like you know this stuff, and you've just got to learn to execute on it. It doesn't happen all at once, because even once I understood things, I think it still took me a good year to get really solid at it, right? And even now, I still think that I've got a couple of rough edges. I mean, I haven't gotten super good yet at, really pushing it when it's in my favor and so forth. So, but for these, that's why I'm kind of saying, like, for you guys that visit the stream every day, you probably learned the key thing that you need to be able to turn around and be successful, right? Yep, Scott. I think position sizing is part of it. The thing that's always hard is not just position sizing, but knowing when to take it off, knowing when it's coming back on you. Because something that's really so I'm kind of starting to learn that this is maybe, should I call it a vulnerability of our strategy? So we're trying to follow large meta orders, right? And so the issue is that when you're following a large meta order, that is the perfect opportunity for somebody with an alternate view on the market to come in and smash the market the other way, right? And so we really have to be on the lookout for the counter meta order. And I've found that really difficult. And so there have been some situations where I caught a really big winner and it came all the way back. Yesterday, if I hadn't have taken my profits where I did, because you remember I was like, maybe I should have held it on, like it went a little bit further, but then it stopped after that a little bit further and it came all the way back. I would have lost all the profits, right, if I had held on to it. And I'm finding that happens a lot on some of my trades. And so knowing when to get out and being able to stick with the order flow, because I think that once you start doing well, you just kind of like relax and say, well, these buy orders should just continue to keep coming through, right? That's kind of the difficult thing. Okay, so under order flow, we should talk about cumulative delta to estimate flows. Down in here under risk management, where I want to talk about something about avoiding hyper volatile markets. I don't know. I got all excited about that big order at the bottom. It hasn't really done a whole lot since. Why does Nassim Taleb keep retweeting this stuff about like banks in Lebanon? Here's somebody I follow on Twitter called Chai Girl. China daily property sales showing early signs of a pickup. Bloomberg says the best places to visit in Japan before swarms of tourists arrive. Ooh, that's what I want to do. So you know what? I don't know why, But all of a sudden, I'm being bombarded with like these large opportunities. Like, here's a guided vacation, or getting a ski pass for the season. And I'm kind of sitting here like, why am I getting all of these? Why am I getting all these offers? Like, it's inflation. Like, the economy's bad. Hardly anybody can afford these sorts of things right now. And I probably could afford those things if I really decided to prioritize them, but I would rather play it safe and save. And it's a little frustrating because some of them are things that I did when I was a kid. I'm like, oh, well, I would like my kids to do those things too. But yeah. Putin says he has signed a decree with corrections to a mobilization drive. So there was some rumors this morning that he was going to do another public address, and the Kremlin denied those rumors. But it looks like that those rumors were not coming out of nowhere, because he is making some correction of some sort, I guess. Financial Times has an interesting little blurb here from an article they wrote. Martin Wolf, 10 years is always enough. Even a first-rate leader decays after that long in office. One with unchallengeable power tends to decay more quickly. A very astute observation. It seems like, when you're like at the top of a nation, your decisions affect so many people, and it's never going to be the case where you make a decision and it just benefits everybody, right? Like, benefits have costs and benefits, and over a long enough time, you're pretty likely that you will, piss off everybody in one way or another, and the sheen kind of goes away. The markets are slow this morning. It sure seems like it, doesn't it? Well, I think that because of the way that the markets reacted to the PMI yesterday, that a lot more traders are kind of cognizant of it, that its ability to move markets, and are a little bit more hesitant to put risk on this morning. I would further argue that, so like yesterday, I made a long post trying to help people like analyze this market when it's so volatile and everything. And like one of the first comments that I got was like, oh, it's just a bear market rally. And I'm like, well, maybe I'm going to respond to them. Maybe I'll make a video to them. But like, I don't know what the jobs report on Friday is going to be. Do you? Right? If that number comes out, 200K jobs added, but below the expected forecast of 250K, this market is going to shoot off like a rocket, man. If the jobs number was bad, or, who knows, maybe it's crazy. Maybe we actually get like jobs lost. Then this market would like really take off, right? Versus, if it's above trend, if it's like 300, 350, then the market might like really panic. Oh no, we're still not getting deflation. Federal Reserve is have to continue to be aggressive. And a lot of the recovery that we've had this week so far has been based on bets that the Federal Reserve is going to pivot of some sort. You know what? I don't like the word pivot anymore. I think we should get rid of pivot, and we should just call it what it is. The Federal Reserve reducing interest rates or pausing interest rates, right? Because it'd be more exact. Because the Federal Reserve is probably not going to reduce interest rates right now. They would really need to see evidence of a really strong deflationary force coming in order for them to justify reducing rates. But pausing on rates, maybe. Or slowing the rate of increase, yeah, I think that might happen here. You know, that's what's been driving this market. So that what that employment report comes out to on Friday is going to mean almost everything. Of course, when I say it means almost everything, that might mean that like it comes and goes and nobody cares. But no, it's going to move. There's going to be volatility on Friday after that news, regardless of what happens, right? Because everybody's going to be watching it and everybody's going to be ready to take a trade based off of what they think they see. Yep. Expected bonds to break higher, but rather it's heading down today. Makes no sense. No trades. Well, so FTH, that's what I expected too. But makes no sense for it to go down. I'm not sure I agree with that part. Because really, orders are what moves markets, and we're kind of in a vulnerable, low liquidity, lots of information, lots of confusing stuff going on time. It makes sense that it would do just about anything, right? And we should know, on both Monday and Tuesday, we did have short periods of strong down action in the market, right? So, and I suspect because of the way that I see the flow over here on the 10-year, I wish I could see the gilts, because I suspect that the selling was primarily in the gilts. So I think that the selling is coming from Europe. And when I woke up this morning, there's at least one person that I watch on TikTok that was talking about UK housing and stuff, and they were concerned about the rise in interest rates today and its effect on housing in the UK. So I think that that's why we're down. I think. Oh geez. Okay, so the OPEC just hit 2 million barrels per day. 2 million rather. Okay, so oil is probably going to take off here. Well, I don't know if it's going to take off. That might have been priced in. But that's not very good. That's not very good for like inflation and the S&P 500 and everything. Highest reduction since 2020. Do the economic conditions really justify a reduction? I don't think they do. But prices have been coming down, right? Like what is this really about? Joe Biden has been selling money from the SPR, and that's been reducing prices, I think. In the short term, it didn't do anything, but then in the long run, after the economy started to take a hit, then it did kind of bring us down, right? Although it really just kind of brought us back to like where we were before all of the craziness, right? So then what does OPEC do? They just reduce their prices. This is just really... I'm really concerned by the moves that I am seeing governments make economically, right? When this all started in 2020, you know, putting some money into the economy and the moves that the central banks made and everything were the appropriate thing to do based on what we knew and everything. And then the politicians went ham on it. Okay, like I can kind of understand that happening. But now, since that time, and you start to see the problems from that, and how do the politicians react to it? And they always do the dumb thing. I don't get it. Well, I mean, I get it, but like, it's just surprising to me that seemingly every leader ends up making the same wrong decision. Are they like all going to this conference and saying, oh, well, we should, you know, we want to stay in office. We should just, you know, buy it all, right? Like what the what was it, the UN the other day demanding that central banks stop raising interest rates and stuff. And so yeah, what does OPEC do? They come in and they say, screw you, Joe, you're gonna screw us over, then we're just gonna reduce output. And there was a news story, so let me go find that. OPEC Plus could be on the verge of the largest production cut in 2 years, a move the White House officials would undoubtedly have a panic attack as they attempt to dissuade the 23 crude producing countries and its allies, such as Russia, from making the cuts. OPEC Plus is considering 2 million barrels a day. Blah, 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 blah. There could be further political reactions from the U.S., including additional releases of strategic stocks, the strategist added. They said the Biden administration could also push forward with an antitrust bill targeting OPEC, but that's not all. According to Bloomberg, White House officials are discussing possible export bans on gasoline, diesel, and other refined petroleum with the Energy Department. People familiar with discussions said administration officials are discussing export bans of refined products with top oil industry leaders, as the risk of an OPEC Plus reduction could catapult fuel pump prices higher ahead of the midterm elections in November. So it was all planned at the Bilderberg conference, maybe. I would need to see solid evidence that that was their plan. Okay, well, the treasuries did move lower after that happened. So treasuries moving down, on oil prices rising, because higher oil prices tends to mean higher inflation. Another person said the Energy Department is analyzing the economics of an export ban. They're probably going to find out that it's not helpful. Days left in the Strategic Petroleum Reserve, 22 days? Yeah, the issue with an export ban is that it's going to make oil prices everywhere outside of the United States higher, so anybody that wants to import oil is going to be screwed. And then all of those people go down, and then, that doesn't help your supply in the long run, right? Yeah. But when are they going to understand that if you want them to make more of something, you need to give them an incentive to do it? Coming in and just trying to punish them for the prices being higher is not going to encourage them to make more. Well, anyways, let's just watch this. I think the treasuries might push a little bit lower. I'm not quite sure how much. It's already 5,000 contracts net sell. I'm gonna make a guess. Like if this really turns into a bender of a move, we could move down to 16. I think that this could be 10 to 15,000 contracts. So we're maybe a third of the way through this. So I'm not seeing. Well, maybe I am. I think that I'm kind of shying away from taking a trade here because one, I haven't had a very good record with, a trade on the treasuries based on oil, for one. And two, we still expect things to happen based on PMIs and so forth, right? So I don't. Plus, I'm chasing at this point. It does look like it's gonna keep going though. What price does that put us at on yields? 3.725. Okay. Are liquidations a predictor of order flow? If you know where potential liquidations would be, yeah. So if you know, for instance, that hedge funds are pressured and getting margin calls and have to liquidate, that would be a predictor of order flow. How you would know that, I have no clue. You know what I mean? Or to the point, when you come over here, there is certainly a point at which you start to get stop orders and everything all piling on it, right? So the problem with that one is you get this thing like I think that we just had it. Yeah. Is basically you can look at the range and you can say, if we have a meaningful breakout of that range, you're going to see some stop orders and people piling into it, which I think is what we saw right there. But like as soon as that happens, it can flip on its head really, really quickly. So that one is a little bit difficult to deal with. A rise in open interest of leveraged products at a particular price level. We would have to take it further than that, Scott. Like we would really need to be able to say, okay, like how do we statistically quantify that and express the price at which we'll start to see that deleveraging, right? Because I've always kind of gone from this spot of like, okay, here's where they're spending all this time. Now they're going to move over here. Those people are going to get stopped out and stuff. And, you know, I did not find that kind of approach very useful, unfortunately. I think the issue is that, or rather, let me put it this way. Bookmap has a indicator that will show you stop orders. Could you predict areas where there is likely to be more stop orders? Well, you might be able to use something like ATR stop. Okay, but beyond that, I'm going to bet you that stop orders are pretty randomly distributed, just like your regular market orders are. And that it's just going to be the case that a certain percentage of market orders are stop orders, you know? I think that it would be really, really hard to find a real statistical abnormality with that. Or rather, maybe there are clustering effects. Maybe there are certain prices at which there's going to be stop orders, but it's not consistent enough to really be statistically meaningful. Might be just enough to see it in the data, but maybe not enough to trade off of it. Could be wrong. Could be wrong, because I don't have the data to really, you know, we wouldn't know until we did the science. I guess I'm kind of biased against that idea because I figured that if it was really that useful, that somebody would have already done a study on it and shown that it happens. And then everybody would adjust their stops. I'll tell you one thing though. Don't put your stops at a round number, okay? Market likes to go to round numbers. Like if I sat down and I said, I'll have my stop order at 112.16, bad idea. Bad idea. Highly likely to trade. I don't know if we get all the way down there, but if we get close to that, highly likely to trade because the market likes round numbers. Right? OPEC plus cuts to be measured from current baselines, says delegate coming from Bloomberg. Treasury is still kind of chilling around the bottom. So on this, what about looking at it as a mean reversion play? Like after X dollars and liquidations, we look for the entry going the no. Because you really the liquidity hole is what's gonna tell you that you're gonna get the mean reversion. And when you get the liquidity hole, does it like mean revert? Nah, like it comes back 3 or 4 ticks, right? It's not worth it. It's not worth trying to play that on a reversal. The risk to the downside is really bad, right? In other words, we already kind of get something that tells us, oh yeah, I might pause here, but it's not very good at getting an opposite trade. Now, the best one is when you have a move that's going one way. So for instance, this right here. Okay, so this is being driven by OPEC. Well, it's probably a little bit too early. But let's just say that we were in an alternate reality where it was like 7:55 my time, right? And then PMIs come out and employment in the PMIs was bad. Heck yeah, we buy this and it's going to skyrocket us up. And the fact that we had this down move is going to make it that much better, right? Then you can do that if you have a predictor of order flow that's going to come in going the other way. So I think if I'm going to say what are predictors of order flow, we have to talk about what is order flow. So a big buyer is coming in here, my friends. Look at that. Is there more? So the cumulative delta did not move up on that. No. If it's not so much that PMI is bad, but that like if prices paid is low and employment is low, then the treasuries are going to rise. The treasuries could reverse really hard to the other side, just like they did yesterday, right? Although it would probably have a little bit more lasting of an impact than it did yesterday, because yesterday they eventually did chill out and come back to where they were. But if even, because what I'm getting at is that we know that things are really bad for manufacturing right now, but services have continued to push. So if we get a sign that employment in services is getting hammered now too, then yeah, we're probably going to see some buying coming into this market. Where are those big volume prints on the buy side coming from? They're not on my side? Oh, really? Well, that was a situation. You should have seen the same amount of volume, but you might have seen them be categorized as offers instead of bids and vice versa. Like I said, like my cumulative delta did not rise through all of that. It's actually still flat. Because, you know, it did it so quickly and it was so messy that the level 2 feed and the matches feed being out of sync might have affected how things got categorized. I heard Larry Kudlow talk about how the past few days rally was driven by short covering, and he knew that by the low volume days. What is he saying, or what does he mean? So there's a general belief among traders that a move up, a move against trend on low volume means that the move has a less chance of holding. But really, we would want to be looking at the order flow to make those kinds of determinations. One of the things that I see, so for instance, I saw a creator. The reason I made my TikTok yesterday, so I saw this creator who's basically preying on people's tendency to hate the Federal Reserve. This is basically, he was like, the Federal Reserve is manipulating everything and yada yada yada, and so he was saying a mystery buyer. There's a mystery buyer coming into the market. We don't know where it's coming. Nonsense. All of these moves up have had very clear news catalysts to them, right? Now, they probably went further than they normally would because of short covering. Yeah. No, Uzi. So, like, let's say, for instance, that there's two feeds, right? There's the orders feed, and there's the level 2, or there's the market depth feed, right? So if my market depth feed is 5 milliseconds off from what yours is, right? Then there are some orders that might be categorized as buy on mine that could be categorized as sell on yours. So the total amount of volume that traded here should be pretty close to the same, but how those individual orders got categorized as buy or sell might be different. So on mine, there was a bunch of volume, but it was actually equal amounts buy and sell volume. This feels like 2000. I'd be really careful with those kinds of comparisons. I know it seems like 5 milliseconds could be no big deal, but like in a situation like that, it could make a difference. This is why, again, I have like the advanced cumulative delta, right? That's supposed to be a little bit better at categorizing them. Yeah, we're not even close to 2008. Well, so here's why I would be really careful about comparisons to 2008, okay? First of all, the financial system is very different today than it was in 2008. So they really built the financial system to be able to withstand a crisis like 2008 again. And so like this is a situation where like one bank goes kaput because of mortgages shouldn't be a problem now. Like they stress test all of this. They come in and they say, okay, there's a move like this. Housing prices went down. How did that affect your bank? And they do all of the study about it to see, right? Okay, so if we do have like a big financial crisis that like causes chaos and all that sort of a thing, it's going to have to be different than what it was in 2008. It's going to have to be some vulnerability that we don't know we have, right? One theory for the rally I'm seeing is that a lot of portfolio managers are managing career risk, as in portfolios are down this year and they're buying the dip. Say, no, I don't think it's that. Okay, let's kind of go back to this. Okay, yeah, it would have to be a black swan. Let's just go back to this 2-day rally. Like if we're just talking about the 2-day rally, why the 2-day rally? Okay, well, because of the orders. It's that simple. It's that simple. The orders that people placed into the exchange caused us to move up to the degree that we did. Okay, so why did they submit the orders that they did? Well, probably there was a lot of short covering involved in that, right? Also, liquidity is just really strained right now. Oh, that was a little bit ugly of a down move there in the 5-year. There's a lot of liquidity strain right now. So look at the treasuries, man. I mean, when we get into new prices down below us, we've got thousands, but everything behind us, like 5, 6s, right? The market makers are not like stacking offers on. The market makers are like, well, I don't want to be involved. I don't want to take risk on in this situation. Like all of my metrics are telling me that this is not a good market for me, and that I should reduce the amount of money that I'm putting on. Okay, so you have a clear news catalyst that says to buy, and then you exacerbate that with low liquidity and a lot the market being a crowded trade causing short covering, right? You get the degree of the move that we did. So when people come in and they say the move didn't make sense, the reason they're saying that is because they think that the magnitude and direction of the move needs to be in line with the fundamentals, and it doesn't, right? The magnitude and direction of the move is loosely correlated with the fundamentals, but not very well. So you have to look at the fundamentals and the order flow and kind of study them separately first, and then see how they match up or diverge. And based on that, you may have potential trades, right? So one theory that you could have is that the total overall economy is still shit, and that future economic news and developments will continue to be negative and will push the market down. And then, yeah, we will have another move lower, sure, right? It's just the move that we had past 2 days, it's only reflective of the orders that people put into the markets. So it does make sense. It does make sense. Is that do the opposite of what you were thinking? No, that's not what I'm saying. I'm just saying when you see a move like that and you see analysts come out and say this doesn't make any sense, what they're really saying is, I believe in technical analysis, and I'm seeing a situation where technical analysis is not able to explain the move. because the move should be in line with the fundamentals, and I don't think that it is. Right? Now, I will come in and I'll say this doesn't make sense. Why do I come in and say this doesn't make sense? Because I'll see a move in the market and I can't explain where it came from. I have absolutely no predictors of order flow, that would explain to me why that particular flow that came through and did what it did, right? And then that's when I'm confused. And what am I saying? Am I saying that like there's something wrong with the market? No, I'm saying there's a piece of information out there that I'm missing. There's something, and it could be any number of reasons, but there was something that drove that order flow that I'm not aware of yet. And so I'm going to be digging in the news extra hard today to try and figure out what it was. That's what I mean when I say that it doesn't make sense. Yeah. But the analyst looking at the big picture, well, that's why I would be very weary about, okay, so if you went and you found like the best economist, okay, or let's say you followed the 10 best economists out there, and then you made all of your decisions based on what the analysts were saying about the fundamentals, right? And you tried swing trading based off of that, right? I think you'd probably do really poorly. Why? Because the fundamentals aren't the only thing that drives the markets. In fact, I think that what we've learned from the inelastic theory of markets and a bunch of other studies that we've seen is that, like, essentially one of the big problems that we have in our markets is that they are driven more by short-term liquidity demands than they are driven by the fundamentals. Especially now that basically everybody is investing almost all their money through index funds, right? I think a lot of macro traders are saying the rally doesn't make sense, but market is macro driven these days, so I'm inclined to believe them. Well, but this is another issue that I have, is that the moves that we had the past 2 days seem very news driven to me, right? We had on Monday, UK backing off on its budget. And what was the other thing that we had on Monday? Because we had something that pushed us down the other way. I forget what it was. Tuesday, we had that PMI. We also had the UK didn't buy as many bonds as they expected. So that created one move. And then we had the PMI move the other way. Then we have today here, we have what? OPEC, right? Like all of these moves that we're seeing are very much breaking news driven. The degree to which it's moving is almost completely a function of how many people decided to speculate on that particular piece of news. But the Fed won't back off? Yeah, I mean, none of that had anything to do with, like, really, I don't think that any of that had anything to do with will the Fed pivot. I mean, I'm kind of saying in a indirect way, right? Like, yes, I think that people were looking at that PMI yesterday and saying, well, that reduces the chances of the Federal Reserve continuing to raise rates, right? But if we were to come in and look at it and say, like, the rate, if you look at FedWatch, you're going to see that the FedWatch tool didn't move that much, even though like the indexes and the treasuries did move a lot, right? So you're trying to say, well, the S&P 500 moving up suggests that the market thinks that there's a Fed pivot, but not necessarily, right? It just means that a lot of people were involved in that particular move. Plus, it's not that they're saying that they're going to pivot. I think that what you're seeing is that they think the Federal Reserve is going to slow the pace. That they're going to, like, we're done front loading, basically. Robinhood, etc. What is the demographic of these people moving that market on just news? Well, so the key thing that I would point out on that thought is that the amount of orders coming in here and trying to trade based on the breaking news like we are doing is chronically low. Like, there's not very many people doing that, and that forces it in very weak, relatively speaking, in the market, and seems to be getting weaker. means more opportunity for us. Well, you don't just follow the flow. You need to have a predictor of flow, right? I don't just come in and look at which way the cumulative delta is going and saying, okay, I'm seeing autocorrelated order flow to the upside. That means that I buy. Doesn't work like that, right? I only care about that because I predicted that I was going to see autocorrelated order flow buying, and that we're going to continue to see that all morning because of X reason. So if I start to see it, then I join it, right? So like the move yesterday, I think it made complete sense. This move here with OPEC, I think it makes complete sense. And the move that we're probably going to get in 30 minutes based off of PMI, I think it's going to make a lot of sense. At least in terms of like what the order flow is. Just don't expect the price of the futures to really truly reflect all available information by the end of it, because it doesn't. It just reflects the orders that were placed, right? Could there be a divergent? Could there be a gap between the two of those things? Yes, there could. And that could suggest that there might be some opportunity there. If we have something that, you know, gives us an order flow to make us go that way, right? So that's what we got to put here in this, is that the market is not informationally efficient. You like this shirt? It's actually not my favorite shirt. The material is really stretchy, so I like that. The color of it is nice. I like that. It's okay on the shoulder. It's maybe a little bit too big on the shoulder. Probably would rather it be right about there. So maybe a 1/4 of an inch less. But I think that that's because it's the stretchy fabric and everything. But the collar does not like stay up, you know? It just goes flat like that. I don't like that. You like the color? You know what? My favorite polo, I got this one from, what is it? It's like Arm. I don't even remember now. I think it starts with an A. It was like a fancy athletic kind of company. So I really like everything about the material and the style of the shirt and everything, but the color of it isn't so good. It's like just too dark of a gray. Actually, so I have this issue. Can I tell you this really dumb issue that I have? So like, when you're doing the photography in the scene for like a talking head video, you want the person to stand out against the background. So part of the way that you do that is you're going to be in focus and the background behind you is going to be out of focus, right? But something that can really help you is the color. So if you're wearing like a black shirt, then that kind of blends you into the background. So you don't necessarily want to wear a black shirt. But what would be better is if there's like some color contrast. So if I have the background behind me is teal, and I'm wearing a bluish shirt, then I don't necessarily pop out, do I? My shirt doesn't pop out. Now, if I was wearing a red shirt, then it would, right? But I've been having a hard time finding reds, and I'm not so sure that red is really my color. So it's like, I like to wear blue and everything that I have is blue, but then the background is blue. So then should I change the background? Should I make the background red or green? I guess I could do that, but you ain't here to impress with your looks. I know, but it seems like it makes a big difference. I guess what I'm saying is that I am expecting sell side orders today because irrational traders thinking wood good PMI print will cause the Fed to pivot or wrong, and big players will sell the rally. Okay, so here's the issue that I have with that theory, Mr. Bond. There's service PMIs in 15 minutes, right? So if the service PMIs come out and they show the same thing that the manufacturing PMIs had yesterday, you're probably going to see this market buy. Probably going to see this market buy. What happened to the birds? Oh, the bird's still around. So when we had a baby, we moved the bird to the basement. One of the birds died, and I'm not quite sure why. I suspect that he, because of the other bird, maybe the other bird was being too dominant and didn't let him have enough food and water or something like that. That the other bird just randomly died. But Jerry's still down there. Jerry's been around since 2008. So he is now 14 years old. So he's getting up there, isn't he? So sometimes I feel bad about him being in the basement, but he seems perfectly happy. Every time I go down there, he's happy to see me, and he looks healthy and all that. So would like to spend more time with him, though. Well, I think that he could live to be 30, but it's probably more likely that he'll live to be more like 20. Because they tend to, especially if you give him too much fat. I give him a peanut every day for protein, so I don't know if that's too much fat or not, but brain cancer might end him more like at 20 instead of like 30, 35. The stream delay must be nuts. Nah. Let me come in here and check something. Stream settings. Ultra low latency. It must just be YouTube today. I'm sorry. We'll test it. I'll tell you what. I'll say Marco, and then you guys say Polo. Okay, ready? 1, 2, 3, Marco. 1002, 1003, 1004, 1005, 1006, 1007, 1008, 1000. Okay, 8-second delay. It's more. It's about double what it usually is, isn't it? I wonder if as YouTube gets more popular, that there's more strain on their servers, and that's why we're not getting as good latency. Might be possible. Might be something in OBS changed for me. Yeah, I think Uzi cheated. I've been thinking because man, the graphics cards have come down. I can get a 1660 for like $100 now. I've been thinking like maybe I should just get the 1660, but well, I'm also on Rhythmic, and you're still on Continuum, right? So our feeds are going to be different. That's what, like, I'm telling you, man. The aberrations in feeds can be like a 10% difference. So some of these like unfinished auctions and that sort of a thing that people look at, it might not be. So like, say you have a move, it comes up and you see at the top, here's the offer, it traded like 800, and then you also see that on the bid it traded like 600. Well, it may be the case, just because of the way that your feed is and everything, all that 600 could actually be part of the 800, and this is actually an unfinished, this is actually a finished auction, right? So like, kind of makes you want to think twice about trading that, doesn't it? Like when you realize that it could be a difference of 10%. You have delayed data, you think? Platform could be being weird today. Oh, we have a little bit of a move down here now. What's with that? That came down awfully quickly. That one kind of looks like that could be some news. No, or it could just be more panicking from the Europeans. So we get services PMI, the S&P services PMI, so that will probably give us a small move, but just remember that there's the ISM PMI at the top of the hour is more important. There was some decent flow behind that, though. Gotta admit that. The Europeans have to panic; they are screwed. Well, it seems to me that there is still more going on in the UK market under the surface that isn't being reported to us yet. And basically, we think about it. If the UK hadn't have stepped in and all of that sort of stuff, all this stuff about pension funds almost exploding, we wouldn't know about it. Because they weren't saying anything. They don't want people to know because then that hurts their execution. But I think that they're bailing on home loans essentially. So they might have intervened in the market, but that still doesn't make people want to hold these swaps and stuff. That's what I suspect it is, but that's why I'm kind of been So let's do a little test here. So if my data feed is delayed, then if I come out here and put an order, I'll put it at 725. No, it's almost immediately shows up. So I think I'm okay. So you say I'm lined up now? Okay. Well. Another thing that can happen is because of buffering and stuff on your side, you might be off. So you can refresh the page and hopefully that syncs you up better. That can happen too. I'm seeing some people know. Well, that was 30 minutes ago. Never mind. Okay. Whoa. Bank of England explains rejected offers at gilt buybacks via Reuters. Okay, let me read this. Oops. Come on. Open image in new tab. The Bank of England gave more detail on Wednesday about why it rejects offers at its new daily operations to buy up £5 billion of long-dated gilts, after accepting almost none on Monday and Tuesday. By the way, around right now was around the same time frame that we saw the bear moves on Monday and Tuesday from the UK market. So the move down, I think that the move down seemed to have been driven by OPEC, but it may be because of this, all right? The Bank of England launched the temporary purchase program for long-dated gilts on September 28th after 30-year gilts suffered their biggest daily price fall on record, pushing yields to a 20-year high above 5% and threatening the stability of some pension funds and the broader economy. The announcement led to 30-year yields falling before 4%, but at its first 5 auctions, the Bank of England bought less than £4 billion of gilts out of a potential £25 billion, and 30-year yields have crept up almost 4.2%. The Bank of England accepted none of the 1.323 billion pounds of gilts it was offered on Tuesday and just 22 million pounds worth on Monday. The Bank of England said from the start that its purchases are subject to a reserve price, which is not public before the auction, and that it aims to be a backstop to ensure financial stability rather than to cap yields at a particular level. On Wednesday, the Bank of England spelled out the mechanism by which it decides which offers to accept. The bank's allocation methodology is not based on absolute price or yield or the identity of the seller, it said. The bank allocates or rejects each offer by comparing the spread between the yield it is offered and the market mid-yields at the end of the auction with the bank's reserve spread. Offers below the reserve spread are rejected. In its market notice on September 28th, when the program began, the Bank of England said the bank reserves the right to reject offers in whole or in part, including in light of other offers received, and reserves the right to set a maximum offer price / minimum yield. Okay. So I think that this particular order flow is one that we could have expected, but I've kind of been ignoring because I know it's from the UK and I don't get very good data from that. But we are seeing some downside movement, and it's around the same time that this happens, right? But we've still got PMI. Yes, I think so, Kevin. If the services PMIs, so let's just go through the numbers, all right? We got 10 minutes. So ISM services PMI is expected to be 56. 56, remember on such a indicator, 50 is considered neutral, okay? So they're still expecting ISM services PMI to show expansion, okay? Services prices paid, there's no estimate, but the previous was 71.5. New orders are looking for 61.8. And services employment, the previous was 50.2. So if I see US ISM services employment come out meaningfully below 50, that could spark some buying in the indexes for sure. If I see prices paid be meaningfully below what they were last time, which was 71.5, that could mean some buying in the treasuries, right? And the key thing that we want to note is that because we're getting this selling from the UK here, if we do get that, and I think that it's probably more likely than not that we do get that in the services, that we're going to get a buy here. But let's just see what happens, right? But I think that I want to kind of be on the lookout for a buy here off of that news. Of course, services could be really good. That's totally a possibility too. I think that it's less likely, but I think that it's still a decent chance that services continue to be strong, and that could really, really tank the market. Since we've already moved down a little bit, you won't get the liquidity sort of thing screwing, causing the continuation so much. So I might be, well, it's going to be like it'll snap back really quickly, or it's a trend day, depending on how bad it is, right? But I won't have the properties of the order of the liquidity quite as in my favor. It does seem to me, though, market's a little upset, or the UK traders are a little upset at how the UK does its operations. They're all expecting to make mondo money off of buying from them, and they're not. So they're probably pissed. Okay, so I just heard on the news squawk that was the results of it, and the UK didn't buy anything. They said the UK doesn't buy anything. So we might see this start to rebalance. So I didn't realize that was like the timing of everything, right? So now that that's through, you might see some of those guys exit and a little bit of rebalancing here before the PMI news. So I need to try and relax here. I think I'm going to, I'm kind of looking at the overall state of the market and everything, and I'm a little nervous. I'm concerned that whatever move we get off of this PMI might be excessively volatile. Let's hope not, but still 5 minutes to go though. That in the strategy PDF. Would it be wise to hold on till news or just throw the dice? Like if you're already in a position, I wouldn't want to be in a position right now. I'm not giving financial advice or anything like that, okay? I'm just saying there's probably going to be some volatility here. And I personally, I'm going to see what those numbers are and then maybe make a decision. But I did, just to be careful about like misclicking, I disengaged my account. So I'll have to shift it over. That'll mean I'm a little bit more flat-footed and everything, but it's scaring me a little bit. Nick Timuros putting a story out from the Wall Street Journal. There are no immaculate tightening cycle, stuff breaks. What they say, when interest rates rise fast, markets tend to break. How to spot the cracks. In other words, seeing things break does not necessarily mean that the Federal Reserve needs to like back off or anything. Just means like, okay, they did what they needed to do and maybe we've caught up. Now we can kind of pretend that they started raising interest rates when they were supposed to. What's the S&P 500 doing? Well, they've kind of been all over the place, haven't they? Trading a 15-point range, but pretty random over in the S&P 500. What the heck? I'm not gonna share that one. It was a joke on Twitter, but I don't think that we should. I don't think it's worth sharing. $90 seconds. What's my ping? Like what, to rhythmic? I think that when I ping rhythmic, I usually get like 40 milliseconds or something. Seconds. Oh, that they're gonna call the U.S. antitrust bill against OPEC the NOPEC bill. I love it. Okay. Oh, that's bad. Oh, see, this is why I did that. I am delayed. I am delayed. You're right. Okay, so employment was 53 versus 50 spot 2, so that's bad. So can you see kind of what I'm talking about? Like there was the initial move. It wasn't as crazy as yesterday, was it? Right? Because they were pushing into the liquidity. So, but I should be able to, no? Well, okay, my feed is definitely delayed now, right? You see that? I click it, doesn't even show up. It's not even showing up on the level 2. Yeah. Let me just adjust something here. Kinda sucks. So if I pull this up over here, rhythmic up over here. You notice though, it's really not as dramatic of a down move, but that could be because of liquidity. I think we could still continue to see some order flow to the downside. You know, we might have to be, it might be a little difficult to get the right prices and stuff, but oh, that's frustrating. My broker might just be doing something weird because of the because of the expected volatility, because it doesn't look like my order is going to the market, does it? Right, it's not showing up. It's showing up in Rhythmic. So Rhythmic says that it's putting it out there. Connected to the right spur, Rhythmic Trader Pro, host Rhythmic 01 Chicago area, blah, 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 blah. I guess we'll just wait for 5 minutes. Guess we just miss out on this one. It's okay. Actually, it's not okay. I really want to be in here. So on this one, did my little, yeah, it did. Okay. My little accidental sim trade did kind of come through and woo, look at that. Look at that. Wowzer, somebody is liquidating. Whoa, mama. Oh, mama. Well, so I'm trying to think what that move that we just had should mean for us. I think it could mean further downside, to be honest with you. Although I think that my bias is always that when I see a big move that I want to see it go further. But like I could really see like short-term pullback here and then maybe further downside. But at the same time, the current market conditions do not look very favorable for a trade on a small account, do they? So I'm wondering, is this, could this possibly be my computer being overdriven? See, it takes a while for my task manager to pop up. 66% CPU. So I'm always, listen, here's the first thing, is that when you're having a problem, it's much more likely to be you than it is the, oh wait, what the fuck? Okay. Says that one of them got filled. I don't recall having my order out there on that. I'm just gonna put this over here so we can kind of see that if we need to. I'm not 100% sure it's the computer. It is getting time for a new computer, but I'm thinking though that it is probably rhythmic. Could be wrong. Could be wrong. But here's what we're gonna do. We're gonna get out of this. Gonna try reconnecting to everything first. Yeah. Come on. That should definitely be filling me. I don't know what's going on there. What the fuck? What the fuck? Okay. I'm really surprised that my order on the upside didn't get filled. Okay. It's really so funny. Dude, I'm a little pissed about all this. So like I was like, well, this kind of suggests to me that maybe I don't want to trade the market. And then all of a sudden one of them did get filled. Like, wait, what? Like what? How did that happen? So here's the one that got filled. Placed at 806. I don't know. I don't know what to say. It was weird, right? It looks like my connection is fine now, right? Looks like my connection is fine now. It's maybe a little bit slow, but okay. So let's kind of try and take inventory of where we're at, because we may get some other opportunities to do stuff. ISM services PMI 56.7 versus an expected 56. Prices paid was 68.7, which was significantly lower than the previous 71.5. But employment was 53.0 versus 50.2. So I think that employment number is really bad, and it's probably the dominant factor behind the market. But the prices having come down a little bit, maybe why this is, why at least at first, the move was a little bit less, you know, was a little bit different than what we initially got. Okay. Seeing flattening. So we're at like 3.75 before the news, right? No. 3.75 was where I said, well, maybe if I could put an order out there, and then it's like, too bad. Okay. So there are some big offers up here now. That's interesting. Shit. Okay, I'm not in a position. I'm seeing that. It makes me want to get in. I think that I should disable my order entry. I really probably don't want to be in the market when things like that are happening. I think that we could see some crazy stuff here in the next 45 minutes though. Another thing I'm thinking about is, could those big sweeps down like that be related to data errors? It's possible. It does kind of seem to me like it could be my connection with Rhythmic. So my CPU is going fine. So I think it's likely that it is Rhythmic. So I am seeing the order flows come in short. Okay. Too late. I tried it. I missed it. I could try it there again at 08 or at 7.8. Well, now that opportunity's gone now too. Look at that. S&P 500's not happy. Not happy. Interesting. I wonder if I put my order there at 7.8 if they would. Oh, okay. Well, they filled somebody at 7.84, so maybe they would have. Kind of sucks. I probably should have a winner here today, and because of the data being slow, that I didn't. But you know, even with the best data feed, you'll have a problem like that from time to time. So, Fed's Daily is speaking again today on Bloomberg Television. Jeez. Okay. Resolute on raising rates to restrictive territory, says Fed's Daily. Isn't it Dally? I thought it was pronounced Dally. Oh well, whatever. It's coming back again. Some of this action down in the treasuries really does look like liquidations to me. Jeez. So I'm seeing a market that looks very damaged. So I'm not necessarily getting like the really key liquidity hole kinds of things, but it does seem to be a little finicky here, right? Like these pullbacks are really extreme. When it comes down very quickly. Offers are still really light. Well, it looks like I could get 378 at least. You have to be prepared for inflation to be more persistent than we expect, says Dally. She says, I'm still seeing about 50% of inflation coming from demand. Why did that shove us? See more rate hikes as necessary. I think that's something that she might have said may have just pushed the market there. Oh, there goes 3.78. Okay. The OPEC will no longer hold monthly meetings. Oh my gosh. So you're getting the output cut and then they're not going to have a chance to change it again for more than 1 month? Oh boy. This market is, I mean, so far it seems to me like the damage is not too bad. But all of a sudden it feels like everything is piling on, doesn't it? Nope. Large spoof at 10.5. Should we call it a spoof? Okay, it's following it up. Okay, every 2 months now is when OPEC is going to meet. That's so you're not going to get a possible change in OPEC output until December, basically. Oh man, this is just like, ooh, and that spoof did push us up. I don't know. I'm actually kind of tempted to trade against it. I didn't see it trade, did you? Rate cuts in 2023 are unlikely in my opinion, says Fed's Dally. I agree. I think that they are going to slow down, but I don't think that they're going to cut. So I so very, very badly want to get involved here because I do think that it's going to go lower, but this is just too big of a mess. I think at this point we could call it just volatile and not hyper volatile. So I think I probably could be okay to take a trade. But I would still need to be very careful because you can see this thing is like, we've come back now 3.775 quite quickly. And that's, you know, if I were to get long here at 775, that would really be like catching a falling knife, wouldn't it? Okay. Fed's Dally says that right now markets are working well. I mean, I'm not going to sit down and say like I disagree with her because I have kind of said things to the effect that like, you know, things aren't going so bad, right? All things considered, right? But I think that a lot of people are going to take an issue with her saying that. I'm not seeing any indications of market dislocation. Okay. Well, now that one is, now if that's the way that she said it, that's a little crazy. That's a little crazy. What happened this week so far? I've been out for 2 days dealing with some things. Okay, so on Monday, the United Kingdom reneged on, so should I say reneged? They basically, they backed off of their budget saying, actually, we won't get rid of that top tax rate. So that was the big mover there. Then yesterday we had PMIs. PMIs had a really positive impact on the markets. Now today we had services PMIs, and services PMIs did not look so good. And that's where we're at. This volume to the upside is a little odd. But look, there's a pretty big iceberg there at 12. Well, once I start getting big orders like that, that's another sign that Seth, you might not want to trade this. England backing off. What kind of France is this? Well, given the way that the market had reacted, I think that it was inevitable that they were going to have to shift on something, right? So the 30-year is being particularly finicky here. I think that if I was fully armed during that news, I think I would have tried to get at 3.7 or 3.75, I think it was, but I wouldn't have gotten filled. So I think I'd probably be in the same situation. It was just that order that I got at, what was it? 3.77. Probably shouldn't have happened. Oh, 3.779. So it was right there. That order was not intended to be filled. I don't know how it got filled. So. Like, I was just putting stuff out there to see if I was actually alive. Okay, so that's not because they don't have it armed. Right? Down here. Yes, but it's a little slow. Oceanic, how are you doing? Not so into this song. Not so into this song, sorry. They gonna finally fill this big old monster iceberg offer? That's an iceberg probably worth playing, to be honest with you. Like, one thing that you might be able to do, let's just try here on Sim. Might be a little bit late for this kind of a play, but something that we might be able to do is try to sell 12 and take the tick out at 11.5. You just got back from the job. Well, markets are getting a little wild at the moment. Yeah. Okay, Dally says we'll see on Friday if hiring is starting to slow. That's a little weird. So here comes crude oil inventories. That one's worth hitting. Nope. Missed it. That's okay. Don't like the way that it's playing out, so. Plus, we got oil here, right? Whoa. Okay, crude oil inventories negative 1.356 versus an expected 1.8. Yeah. I think it'll take them a little bit because this market is clearly like a little crazy, but I don't think rates are done for the day. So just think about everything that we got here. First, you had OPEC. They cut production. Then they said we're not going to have another meeting next month. And then all of the inventories just came out as a draw. Okay, and then on top of that, services PMI is still high. Like this is like the worst slate of economic numbers that you could possibly get. Well, I kind of FOMO'd in there and it didn't work out very well for me, did it? Okay, the iceberg moved down to 10.5. Is that what happened? That could be really bad, guys. If they don't bust that iceberg at 10.5. Yeah, that's not good. That looks to me like there was a large iceberg at 12 that was not completely done and has just moved down to 10.5 now. Chased the market down. Now they didn't bust through 10 either. There might be an iceberg at 10 too, but this one at 10 doesn't look like so much as an iceberg, is just people taking profits and bidding there. Didn't act as much like an iceberg, even though there's like 1623 is traded there. Okay. It does look like the iceberg at 10.5 may be filled. Okay. Interesting. So not a whole lot of offers are being placed there at 10. It's kind of getting it's looking impulsive, right? Like when it goes down, but then somebody is buying it back up at 10. That doesn't look like so much of a hard iceberg, maybe a synthetic iceberg, but they did absorb a decent amount of contracts at 10. And it's about as many contracts on the bid now as were absorbed on the offer. Well, it's doing the same thing at 10.5. So what I'm seeing here at 10 and 10.5 is not so much that there is a liquidity hole here, but activity that is likely to result in a liquidity hole. Every time that they tick up, they're having a hard time holding bids on offers for it to move. Well, okay, so 11. As soon as I say that, 11 pulls, and maybe they're going to tick up here. Yeah. At 11 is kind of pulley. Like they bid 500 at first, and then as soon as any orders went into it, they immediately pulled. Not many contracts to take 10 half offer. That's a little odd. Japanese yen doesn't look too hot. Dollar looks incredibly strong. Can the dollar really continue to get stronger here this morning, though? We're already up. Whole dollar. We're already up a whole dollar on the dollar index. Okay. And what about at 12? Was a big order at 12 that pulled. A little bit of fight at 11.5. It's probably been long enough now. So we're about 40 minutes out from the big news that pushed us down, of course. There was also OPEC about 15 minutes ago, right? But I think that the liquidity might be okay here now. So if somebody wants to come in with a mid order sell, we might see it come. Decent pullback in the indexes to re-enter. They haven't been so in the when I look at the indexes here. Do you see a close above the previous bar's high full session? Don't see it. Right? Maybe if this bar closes, maybe if in the next 2 minutes they get above 47, 43.50. OPEC wants prices around $90 per barrel. Really? They're that. They have that price, huh? They know the price they want. I didn't know that OPEC kind of functioned in that kind of a way. Well, the flows that we're starting to see since the oil inventories has been slightly to the long side. But look, you're still getting this thing where like when the selling comes through, like the bids just pull and they just slice through it. Although we'll see if they get back to 10. Mm-hmm. Hmm. So now all of a sudden, it seems like they're having trouble getting people to do things here. Hmm. That's a fight. It seems like it's to the long side, but I'm getting it both ways. Well, fuck. Wow. Russia will not sell to oil to countries that implement price cap. Was that what moved them like that? That was a little crazy. I think that's Seth has to puke here. Knew better, did it anyways. Yeah, it really was wild, wasn't it? That really looked like a news reaction to me. Although I have to say that, like, the order flow was a little weird on it and everything. You know, like seeing this ramping dollar. Well, the dollar just pushed a little bit higher. So here's the thing, that we saw that move there in the treasury, right? Did not move in the Japanese yen, from what I can see. My data in the Japanese yen might be delayed or something. Tell it to reload historical data. Let's see people taking it there, 7.6. No. FX Street News referring to non-farms. Final thoughts. The dollar and stock markets are set to respond to any outcome on non-farms payroll, with the tables still tilted in favor of the greenback and against shares. Sure feels like it, doesn't it? Well, somebody did go long there, and yeah, Mr. Bond did. I think you got lucky there. I really wonder what made that move. Okay, next meeting December 4th for OPEC. Val, good morning. You're late, man. We only got like 15 minutes left, dude. Getting tied up. You're like the third person to come in today and say something like that. Like, I just got back from work or whatever, like trying to catch up on markets. And yet the market's been like really crazy today. The move down was really crazy. This pullback, move up has been really crazy. Like the news has just all been piling. Every piece of news that I've gotten here sounds bad for the markets and treasuries. So it's actually a little bit, I think that markets are a little bit lucky. So the UK, they backtracked on their budget at around where our lows are. Okay. So that might be one key point of like support that might be causing some of this pushback. But overall, I feel like that the treasury market is lucky that that's all the damage that's been done today, to be honest with you. Because all of the news has just been piling on. Delusion? Well, I don't think it's delusion. I think that the liquidity is just as such that they haven't been able to push down as much as you would think. Kind of causing my current frustrations. Jeez. If I was long, that downtick there at 14.5 would have been really frustrating, right? So like it's sitting there, it's fine, it's fine, it's fine, it's fine. Oh, and then it ticks down on 15 contracts. Right? Oh, it's a little better there at 14. Actually, let's just clear everything. EM live bond. Hostile action per the White House. And then this Twitter guy's comment, just piss away what's left of the SPR, Joe. White House is not happy about what they're seeing today, are they? You know what's surprising to me is that it's like since the OPEC meeting, they had like a big down move and a big up move, and they're basically where they were before. Now, of course, the oil has been rallying for the few days going into this with the expectation. For don't get me wrong, but it's just not as much volatility as I thought that there would be in oil here. It's about $1 range worth. And last time we were in a situation like this in oil, it was like $5, right? Well, the flow in the 10-year treasury is still pretty mild. There was that really crazy move up, and it looks like this down move might have just been the post-meta order, regime change settling back down. So I haven't seen yet strong signs of like selling coming back in. Okay. When I look at my Japanese yen, it's like frozen. So I don't think I'm actually getting Japanese yen data to see if it's in line. or gilts for that matter. Although it does look like gilts have been trending down all morning. Or not gilts, cable, but British pound. Oil is strange. IV was 52, 53% earlier this week, and now it's down to 47.5. So even the players lowered down their expectations. Well, I think that I don't know why this is the case, because I can remember in the past when there was rumors about what OPEC was going to do before the meeting, and I was like unsure about it, and then it wasn't quite what, you know, the rumors. But this time it seemed like everybody was pretty confident what OPEC was going to do. So I don't know what's with that, but yeah, they're their IV, what you would expect the implied volatility to be high if there was an OPEC meeting, right? So there's 14 going off again, but it's just kind of lackadaisical about it. Ticks back up. 500 hit 14.5. So a little bit more activity, but nothing too crazy. I wonder if Europeans are like maybe taking their trades off here. Oh, 10 hit into 13.5 there. That changes the chart at least. Yeah. Wow, you had a big Euro USD short? Oh man, you're doing great today because the dollar's just been crazy, huh? There's it goes off again. Only 7 contracts that time. I know they're hitting back. It's possible that they could just kind of range here for a little bit, and then much later in the day, maybe after European market is closed, because I think that they close at 9:30 now, right? 9:30 my time. Then maybe it's able to go lower then, but right now it's kind of acting like they're done. So I still got a few minutes left. Biden is speaking on CNN now. Man, there's those reports that the White House was concerned about what OPEC was going to do today was no joke. They are like all hands on deck. Biden's on the news like they're panicked about it, dude. It's not a good look for them. Because, like, what do you do? From my perspective, it's like, well, that's what you get for trying to fight with the market, trying to control the market, blowing up in your face. Couldn't, you know, kind of tried to warn you. Europe closes 4:30 London time, but right now it's 9 o'clock. So I'm saying I think that the European market closes in 30 minutes. Kind of changes with daylight savings time, but I think we're past that. So I think that it closes at the bottom of the hour. Okay, I'm right. So you might see some weird stuff happen in the next 30 minutes if there's like still some big moves for them to do. But then after that, we usually tend to see a little bit of a change in the flows of things. Although that often means like just less opportunity and markets don't move as much overall. So we'll see. We'll see. A little bit of a move up there in the treasuries. That's an okay bid at 15. I think that ding, given the way that the markets are and we're not really talking about anything, I think it's time for me to get going, guys. So let's change the title in here. OPEC cuts production. White House freaks out. Now we won't add the White House freaks out bit. I don't have enough space. Okay. Weird day. A little disappointed with how it went for me, but we're trading volatility. That's what tends to happen to you. So, see you guys tomorrow, Thursday. In the meantime, stay excellent, team.